Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Thursday, June 29th, 2023. As usual, before I jump into all the charts, just want to encourage you to please click like, subscribe to the channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily triple Q, daily SPY analysis, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 month near term investor, always looking for about a 20% gain or better on the underlying stock. So check out wickedstocks.com. You'll get all of that in a single package, and we offer a 5-day free trial with it. So here we are. Thursday's Daily Tesla Report. Let's jump to the big picture just to remind you of kind of the longer term dynamic. That's the undercurrent, really, of the market, if you will. We did settle about 5 weeks ago above this longer term descending channel top at 197.24 that indicated the 277.69 rising channel top as a 2 to 3 month objective. We realized this in about 3-4 weeks. Ultimately, still allowing a retest of the 414.49 all-time high, possibly by the end of the year. But for right now, the midterm outlook is, having trouble, of course, as anticipated. I'd mentioned how once we test the 277.69 rising channel top, within a month or two of doing so, we could fall all the way back into the 180s, 190s long-term support. There's no signal for that as of yet, but it is certainly allowed in terms of kind of the normal rotational highs and lows over the midterm time frame. Now, of course, if we close above 277.69, that should maintain an accelerated upside dynamic as we move through the rest of the year. And under that scenario of closing the week above 277.69, I would expect that 414.49 all-time high within about 3 to 5 months or so. That would be by the end of the year if we close this week above 277.69, and I don't see that happening. That would be tomorrow, and we're far away from that. So let's catch up as to what happened. Well, actually, I'm going to jump to the 2 to 3 week outlook, as I've been sort of outlining now for the last week or so, that coming off of this channel top at 278.18 on the daily chart, this market has lots of breathing room to fall back to 224.86 over the next 2 to 3 weeks. We're about a week and a half into that, and we could certainly by the end of next week, over the next couple of weeks, fall to 224.86. I'll get to that in a moment, where we could bottom out possibly through July and rally back into the 270s again within several weeks of doing so. That's where the 2 months comes in terms of the possibility of anticipating this market falling all the way back into the 180s, 190s. It would be a settlement below the 224.86 rising 1/3 speed line that would signal the 180s, 190s long-term support within another 2 to 3 weeks. So that is the 2 to 3 week dynamic. And while we're looking at this chart, I'll just mention that if we were to settle above 278.19 over the next week or two, not only expecting a test of that all-time high, of course, by the end of the year, but over the next few weeks, the 313.60 to 314.66, and that is shown here on this weekly chart as this shelf high area, kind of a triple top really, but congestive high area from August of 22. This should give the market trouble on at least a weekly, if not monthly basis, and once again is considered a 2 to 3 week objective if we were to close above 277.69 sooner than later. So let's get back to the day itself. I've shown this chart. Let's move into here. So we've got sort of a kind of a flip-flop, if you will. We close below this channel structure that is parallel with the overall longer-term channel. We settled below it on Monday, right back just above it on Tuesday, follow through to the upside on Wednesday, and here we are. In the process, we also close right back above this speed line. So today that's 248.37 to 248.97. This is your base. I'm going to call it short-term support. And what I mean by that is it can contain selling into next week, and yes, above which we can rally back into that 278.19 area over the next 3 to 5 days. Continuing with the upside scenario for today, I do have 258.85. And that is a level that we actually did push through a bit on Wednesday. It is an upside 5/8 Fibonacci upside level. 50% upside retracement. I like 258.85 for a number of reasons. It's also consistent with that long-term Fibonacci, as you recall, at 258.15 that goes back a couple of years. It's consistent with the low of the high of 257 and change. So 258.85 is our intraday resistance, is our upside pivot point. But until then, holding below it does allow this market to ease back into the 248 handle today. Yes, I have 250.14. That's this band, but I've just eliminated it altogether in favor of 254.34, 252.55 on the way down. Both well suited for aggressive day traders, for those of you who like to grab several point moves. But in terms of the day trade of the day, it's holding off on being long unless we either A, push or open above 258.85, or B, ease back into the 248 handle, where we could bottom out into next week. And as I say, by the end of next week, actually retesting the 278.19 formation. Upside today, if we push or open above 258.05, 267.06 is in reach, and that is that long-term descending two-thirds speed line that we did push through last week. We didn't close above on a weekly basis. It is still a legitimate line study, and I'm considering it at least able to contain session weakness. So pushing through 258.85, 267.06 in reach today, where we can place a daily high. And if we close today above 267.06, I think tomorrow we would likely reach, again, the 278.19 channel top, which is part of a range that begins at 277.69 on the weekly chart that can absorb buying through July, and below which, once again, the 180s, 190s shouldn't be discounted as a possible downside target between now and the end of August or sooner, over the next couple of months. So let's talk about the downside today. I will say that if we close back below 248.37, I have no way to see this but weak. In terms of selling pressures can build not only tomorrow, Friday, but into early next week. Closing today below 248.37, I see 3 to 5 day target once again at 224.86, where once again we can bottom out, possibly through July. And from there, rally back into the 270s, 280s again within several weeks of doing so. It would be a settlement below 224.86, and that's obviously not going to happen. But this rising speed line, let's say by the end of next week, we close below 224.86, that certainly clarifies the 182.21 to 197.24 region as of the next 2 to 3 week target. As I've been saying, as we tested the upper 270s, mid 270s last week, I was mentioning that as that occurs, that is your prime timing for purchasing out of the money puts, because those out of the money puts get a little cheaper, obviously, as you rally away from them. And as you're testing this key resistance at 277.69, that is the timing. It's the most difficult time, of course, because you're pushing into this sort of new pullback high in that moment. It's not the easiest thing to do. I recognize it, but it is the thing to do, obviously. I mean, you can, of course, some traders wait for the market to pull back and show weakness. And that did occur really earlier in the week when we closed for a moment below this 248.37 to 248.97 region. So, you can endure the downside retracement, the settlement below near-term support. That didn't work out, obviously, but that would be the next play to the downside. But by that point in time, those 190 out of the puts are even more expensive. So, I don't have to tell you this if you're an experienced options trader, and I don't know why I'm going so deep in the weeds on this, but what I will say, and we are at 9 minutes now, I will just clarify that if we close today below 248.37, expect 224.86 by the end of next week, where we could bottom out through July, and if settled below, should yield that 180s, 190s over the same time horizon. That is all I've got for Thursday's Tesla report. I'll be back tomorrow with Fridays, and you have a great evening. Oh, by the way, please check out wickedstocks.com. I'll talk to you soon.